Hi, this is Randy Finney with the right side of the chart, and this is a closing market wrap for the week ending Friday, June 18th, 2021. I'm going to go over the same things I've been focusing on lately, and that would be the stock market via SPY, the S&P 500. We'll look at the futures, XLF, gold, the dollar, commodities, crude oil, natural gas, and AMC. So the same one I've done the last few videos. Just keep focused on those for now. Not that there's not other things out there. I'll loop back to some of the other recently highlighted trade ideas, as well as work on getting some new ones out to you next week. Starting out here, the S&P 500 has now triggered or broken down below the my secondary trend line, and that was our primary trend line, which we had a sell signal to break down back here. We went sideways for a couple months, and just recently, I'm going to have to zoom it in for you in the video, today, with conviction too, we took out that secondary or benefit of the doubt trend line. Hit parked right on the 50-day, so that's it. Dropped down to support. 50-day, you can see. Well, you know what? If you can't see, I'm going to make sure you can see. We're going to turn up the color a little bit. It's the yellow line right there. This the 50-day exponential moving average, and when you roll back, as I'm doing here, you can see just how well that often acts as support and resistance. It's a very key, well-watched moving average. That was a big red candle down through it, only to close right back near it, and then a lot of tags recently. So we watched that, and you know, a case can be made. Certainly, you step in and buy. It worked there. It usually works in an uptrend, not always, but quite often. However, based on the divergences that have been building and some other things I'm seeing, I'm going to put my monies on a breakdown below that level, and again, a minimum drop to about that 404.31 level, and quite likely more. These divergences would indicate a bigger drop to come in the coming weeks to months. So let me just turn that line back down. I don't like too many colors on my chart popping out too brightly. It's a little bit distracting. So that's that. Let's look at the futures real quick. ES, the S&P 500 futures, which are right here. And there it is. So, you know, a couple weeks back, I had mentioned, you know, based on, or even more recently too, when we got the breakdown in the financials and industrials, that expected to see, you know, the S&P fall or outperform, or maybe even keep up with the Nasdaq 100 on the downside. And I said that because typically it falls less and goes up less than the higher beta Nasdaq 100, which has a much heavier weighting in tech stocks. You know, remember when you go long or short the S&P 500. You're shorting or buying, going long, both the best of 500 largest companies in the U.S. in many different industries, some which are bullish at any one point in time, others might be bearish. And that's why if you really want to, especially if you're using ETFs and not futures like we're looking at here, you're best going off, you know, going long the most bullish sectors and going short the most bearish. And I'll get to those in a second. And two of those, you know, some of those recently were the financials and industrials. So, but there it is. This is a nice, clean, bearish rising wedge pattern on the 60-minute chart. There was our breakdown. It was impulsive. We took out the first minor support level, and typical correction so far, meaning it's impulsive. That's what you like to see. Stocks often drop more than faster than they rise because of where we are today. This is after hours. Keep in mind, these are futures. I'm doing the video almost an hour after the market closed. But you know, take this point, go back here, and then you can see where we were. So we've wiped out now, what is that, almost a month of gains right there, not just a little bit under, in just a matter of a few days here since the breakdown. So that's why, you know, when you're shorting, you have to be a little faster than when you're going long. And you also, most importantly, can't stay too late to the party. I don't see a lot on these indicators. They're pointing lower. We have some potential divergence on the RSI, but no divergence on the PPO because we just made a new low. And so that, therefore, I'd maintain these next two targets here at 41.31 and 41.04. NQ Nasdaq 100 futures have been a little whippy. We did have a whipsaw, false signal. It was Fed induced. I probably didn't do a good job or any job of doing it this time around, but if you follow me for a long time, you know almost every FOMC meeting I say, you know, the only guarantee is you're going to get volatility around that, and you're going to get whipsaws. Typically, you get a knee-jerk reaction one way right after the announcement, then a reversal, and sometimes a reversal after that, and there's really no way of knowing which reaction sticks. So it usually takes a few days for the dust to settle. meaning all market participants being able to digest and absorb what they heard. And what I've been predicting for months, but it's finally started coming true in the last couple months here, and was reaffirmed at the last meeting, is they were gently tapping the brakes. I said they would never do a hard stop. You can just hear drip, 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 just increasing buzz about the Fed pulling back, becoming less easy or more hawkish. And that is, we've seen them, they're going to start unwinding their corporate bond positions and taper off the bond buying, treasury buying programs, and already talking about they've already at the last meeting now moved up we call the dot plot, or the projected the range of when they might start raising rates. So there it is. Now, where are we at? Well, we closed right back on the trend line in support. It was whippy, but based on what's going on in the S&P, I still favor this. We have seen that rotation, as I said, since financials and industrials broke down. We did see some buying into tech, so it doesn't give us an all clear short yet. But if we can break this wedge, especially if we get below those post-Fed lows right there from Wednesday, that will give me a check box. And then again, we'll probably see these targets and then some get hit. Again, that 60-minute chart of NQ. RTY, just nice. This is what you want to see. When you take a pattern, a breakout, whether it's a bullish long side breakout or a bearish short side breakout, that's it. There's your sell signal. And if you took the short on RTY on the breakdown, it's down, about 4.3% or so. And here's XLF, financial sector ETF. There was our uptrend line, which was broken with our sell signal right there. And I posted an update earlier today on this. First target's been hit. And that was good for, what did I say? It was, I think, about a 7% gain from the breakdown point. If you shorted it on the breakdown that day or any time thereafter, even the close that day when we had a confirmed sell signal with the close below, you're talking about 7.5% or so. And then as even before and after they broke down, I said you'd probably get more bang for your buck shorting the regional banks. Their individual charts were more bearish, and that's certainly the case. And they tend to be more volatile as well, meaning you get a correction in the financials and the banks, they're going to drop more than the big banks usually, not always, but typically. So there it is, and they're both at support. So there's a common thread. Now, odds favor reaction. Reaction can come in the form of either a bounce or consolidation above there, but that is not guaranteed. And so we'll pick this up Monday. That's all we can do. The markets are closed for the week. Should we gap down below, that's going to be a pretty ominous sign, pretty bearish sign, because if the buyers don't step in there, if I was a bull on the financials right now, that's where I'd come in heavy right there. That's a big support level right there. But if we break down below it, look at it this way. Take this box right here. That's a multi-month trading range. Been a lot of consolidation. Financials had stalled out. And whichever way we break, a solid break from this range is likely to determine the next tradable trend. There's certainly been a short-term trend of a nice little, whatever I said, 8-9% drop right there. But I'm talking additional downside. And I'll have to. These levels, I've had these for a while. I'll have to sharpen my pencil and give you some updated targets. But let me just say right now, I like this 54.32. If we get the downside break, that's a level. I think that's a very likely swing target, and that would be another almost 15%. If we get there, and based on the divergences and everything else that's gone on, I think there's a good shot. Now, remember just the other day, earlier this week, I did a analysis of the VIX, showing you these fairly predictable spikes that occur on average about a little under 2 months, sometimes a little more, sometimes a little less, but about, let's see, this one from the last spike right there, we started going up. At this point was where we bottomed, and then that was the next bottom. That was exactly 2 months, so that's about roughly 2 months. Some are a little shorter, and so I'm talking about these blips. It's kind of like a EKG. You get the blips up, you often get another blip up, a drop, blip up, blip, blip, blip. You get a big blip. So every now and then you get a big blip, and the technicals are also indicative. They work just as well on the VIX. It's really almost like looking at the S&P upside down. When you have positive divergence on the S&P 500, you usually have negative divergence on the VIX, and vice versa. So recently in this daily chart, we've had positive divergence building on the VIX, indicating a big move coming, while we've had the negative divergence on the S&P. So the VIX popped up today to hit that. That's a pretty big level there, 2042. So this kind of meshes, it does mesh with what I showed you on the S&P 500 or SPY, and especially XLF, the financials and some of the big financials hit and closed at support today. So what you're going to look for next week, we'll probably either gap up, take out that trend line, and if so, if we don't get any consolidation or bounce in the financials, it's going to be pretty bearish, I think, like I said. And VIX was up 16.62% today, so we could spike up here. And if you're, can't trade the VIX directly, you can buy options, you can buy futures on the VIX, you can buy options, which are options on those futures. There's near month, you go farther out, or you can buy one of the ETFs or ETNs, technically speaking, the ETNs such as VXX, and that one was up 9.6. Remember, this is short-term futures. They also have the VIX midterm futures, so let's see what that did. If I can remember the symbol, VIX midterm, here we go. Here's one of them. And that one was not much. Yeah, that one was only up 2.55%. So, the pure play always is, if you're serious about trading the VIX, look into VIX futures. They're a little quirky, and even the VIX options. They don't settle. They don't settle the third Friday of each month. They settle on the Wednesday. So you need to know what you're doing there if you're going to trade those. But and if you don't know what you're doing, stay away from options. Options to me are the death of any newbie trader. They're super leveraged, and I've always said this to options. Trading stocks and futures, that's tough enough to get the call right on where something's going. But if I go long or short a stock, I'm either going to be right, wrong, or early. Now, what does that mean? Let's just say, let's go back to XLF. Let's say here that I shorted right here. Let's say I was anticipating a breakdown and I was targeting T3, so I had a stop up here. In that case, I'm early. That's what I considered, because I went in short. I went underwater. My position went down because the stock went up or the ETF went up. But ultimately, if it hits T3, I'll prove to be right. Wrong would mean I'm stopped out. And there's been times that I'm right, but it takes a long time. A stock consolidates for a while before my target, or it takes a long time to work its way down. But then you get paid off if your price target's hit and you're not stopped out. Whereas on options, and trust me about my experience with them, if you're right on the call on where something's going, but you're wrong on the time, you don't get paid. So that's why I said it brings in an extra degree of difficulty, not only getting it right on where the security is likely going, but when it's going to get there. And I'm talking just simple, straightforward put and call buying. But even then, if you're, even if you're trading complex option strategies, there's that whole time element that's definitely a big part of it as well. Gold, no change. We're still on that the top of the buy zone right here from a long time ago. So no update there. Just a day of consolidation, down just slightly today. Remember, the dollar's still strong after breaking out recently, putting in that divergent low. We'll skip over that. I'll just show you. There's a chart. There's dollar futures. So continue to hold up, and until they reverse. And now we're starting to get some divergence. So I think next week, I suspect we'll get a pretty decent reversal. I still like gold here, especially for both a swing trader and a long-term trader, long-term investor. But you can see we now have some negative divergence, which we didn't yesterday, and it's pretty steep divergent. Prices making a much higher high, and these indicators now lagging. So whether we go up a little more or not, and then you can also draw a steep trend line like that. That'll probably do the trick. And I think the dollar will come back in here. I also think it could be the end of the run. I'll have to. Yeah, I told you I'd get to, and I will, the charts of the euro US dollar. I need to study that. Right now I'm just kind of out of that dollar trade. It hit my target back here, my max target right there, and I'm starting to layer back into gold. And DJP, the general commodity ETF that I've been focusing on yesterday, as I told you, hit support. So that's support. It's bottom of the channel. And so far a little bounce today. So as expected, a reaction on the initial tag of the bottom of the channel. Like I said, I have my concerns because we put in divergence, but this trend indicator is still bullish and trend is strong. So a case can be made to buy commodities here at DJP. Select commodities, we've got to go through the charts one at a time. That's too long. We'd be doing this video forever if I covered each and every one. So just kind of getting the pulse of commodities because they tend to move together, especially during strong sell-offs like this. And so there it is. So that's that. If it does break, I suspect we'll bounce. And if you're trading DJP, if you're actively trading it, there's a gap to be filled right there. Traders will watch. That's a potential bounce target. Yeah, the midpoint in the channel I talked about as a potential bounce target. And if you're in for long term, set your stop and let it run. Just remember that with the divergence, if we do break, if this trend indicator flips, we could come back to that 23.33 level. And if so, we'll revisit. I'll continue to update this one anyways. Commodities I've been really hyper focused on for the last over a year now. Crude oil, broke down recently, a little breakdown back test, a little snapback rally today, but based on the divergences. And again, market hitting support in the financials, we'll have to see. If we bounce in the market, this could go up, but I'm leaning towards more downside in crude. Some of my lines disappeared on this chart. I'll have to replicate it. But one level I'm watching, I can just see it right here, and I believe I had that on the chart before. There's several reaction highs right here, and that'll be a level that traders will be zeroed in on and probably step in and buy should we move down around 66.60. So that's crude. I'm going to move away from natural gas because I covered that recently as a short here. We hit the trend line, and so right now, other than that, there's some positive divergence. I think I mentioned that yesterday, but I'm just not feeling it right now. You can certainly take a shot at a long there, but with commodities testing that support, and here's also another little support level right here. With DJP near that support, if it breaks, you could get a broad-based sell-off of commodities. Could take natural gas down, but natural gas tends to march to its own drumbeat more so than some others. But again, like I said, take it if you want. There's the levels. I'm standing aside from that one for now. And that leaves AMC, and then we'll wrap this up. AMC today was options triple witching, I believe, or was it a quadruple witching? One of the two. And really a non-event. Thought we'd see more movement in AMC, but what it did do, it broke this level, this trend line I have right here. Let me see if I have it on this board. No, this is the one I have it on. This is a 15-minute chart, but there's that uptrend line. We cracked it, but not very impulsively and not by a lot. I have to zoom in tight for you to see it, but I'm going to take it on face value. That's how we could do with these things. You second guess every trade. Sometimes it works out for you, but sometimes you wish you would have just taken the signal. So it's a breakdown, but again, it's not impulsive. It came on a quad witching day. And again, I'm zooming in here on this 15-minute chart. So if we gap down next week, it will mean rejection on the back test of the trend line. If we get up there, it'll mean just a little whipsaw signal, we'll call that. And then you got still a big level forming here. The old level was about 60. And here's the thing, they've taken it out a couple times, and according to all they call themselves the apes, the Reddit crowd that's bullish AMC, they've had several opportunities to trigger that big short squeeze they keep talking about, the mother of all squeezes coming up where they think the stock's going up into 100 or more. They didn't do it there. Then they got above 60 again. They didn't do it there. So now we have these two trading ranges. So now the top of that becomes the important level. Call it 64, 65. It's a volatile stock. Don't go down to every penny. I have it at 64.37. You got to give it a little room. So anyway, one to watch. And I still think I don't think they're going to pull that off. I've told you my reasoning, including but not limited to the fact. Shame on you. Shame on you. Or I'm sorry. Fool me once. Shame on you, fool me twice, shame on me thing with the hedge funds, meaning that they got burned bad on GameStop, and a couple gotten burned a little bit here, but not. I don't think it's from what I've read, they're positioning different, and I don't think it'll happen, but who knows? We'll see. If it does, more power to those apes. Targets, this chart is all muddled up now because I've added so many lines, but once this gig is up and it becomes clear to the Reddit group they're not going to take this one to the moon, it's going to come back down to earth and maybe even below. Still maintain a target, a longer term target, initial swing target of $9 with the first stop down here about 14.32. So if you've got the gumption to short it, it would be about a 76% drop to that first target, and then about a 85% drop to that next target. I've seen plenty of shares available for weeks now at Interactive Brokers available to short, meaning it's probably not as heavily short as they think it is from the data they're getting. So anyways, we'll move on. And yeah, let's just wrap it up there. That keeps us focused on the ones that I've been watching over this last week. I'm going to wrap it up here, and we'll pick it up on Monday. We'll see what the financials and the S&P 500, how they open. We'll see if tech stocks continue to hold up and money rotates into those. If not, if that tech rally fizzles out, then that's it. I think that's all she wrote. XLK. So we'll watch this one closely next week. Technicals indicate that it's probably going to come down soon too, and so we'll watch this one. All right, guys, this has been Randy Finney with Right Side of the Chart. Have a great weekend.